Tesla just lived through one of the most dramatic years in its entire history. A year where the stock collapsed more than 50%, then exploded upward toward record highs, all while Elon Musk promised robotaxis, battled regulators, and tried to convince the world that Tesla isn't just a car company, it's an AI and robotics empire in the making. Today on the Daily Stock Drop, we're breaking down Tesla's wild 2025, the drops, the highs, the catalysts, the controversies, and what we can realistically expect heading into 2026. This is one of the most polarizing stocks on the planet, and this year proved exactly why. Before we get into it, I'm not a financial advisor. This video is for entertainment purposes only. Always do your own research before investing. Tesla's 2025 performance, the chaos and the comeback. Let's start with the big picture. Tesla's 2025 was a tale of two completely different markets. The first half, brutal. The second half, electric. No pun intended. The early year crash, January to March. According to multiple reports, Tesla entered 2025 under serious pressure. Revenue dropped in Q1 and Q2. Deliveries fell year over year. Earnings plunged. Q1 EPS fell 71%. The stock hit lows around $222 in March. This wasn't just a dip, it was a full-on collapse. Tesla tracked a drawdown of over 56% at one point in early 2025. Why did this happen? A few major reasons. EV demand softened, especially in the US and Europe. Competition from China intensified. Regulatory pressure. California threatened a 30-day sales suspension over autopilot marketing. Margins were squeezed as Tesla cut prices and regulatory credit revenue dried up. This was the moment analysts started asking, is Tesla losing its edge? The massive rebound, April to December. Then, almost out of nowhere, Tesla flipped the script. The mid-year surge, May to June. Tesla surged 22% in May, its best month since late 2024. What changed? Elon Musk returned full-time focus to Tesla after his Doge government stint. Robotaxi hype exploded. Analysts called it Tesla's golden age of autonomy. Investors shifted from EV fundamentals to Tesla's AI and robotics narrative. This is where Tesla's identity shifted. It wasn't being valued as a car company anymore. It was being valued as a future AI platform. By late 2025, Tesla shares were up 16% to 28% year-to-date, depending on the index, trading near record highs around 489 to 495. Even though Q3 earnings were mixed, revenue up 12% year over year, but net income down 37%, the market didn't care. Why? Because Tesla's story had changed. Investors were buying the future, not the fundamentals. What caused the dips? Even during the rally, Tesla had multiple sharp pullbacks. Let's break down the biggest ones. 1. AI sector sell-offs. Tesla is now tied to the broader AI trade. When AI stocks sold off in late 2025, Tesla dropped with them. 2. Regulatory pressure. California's autopilot marketing investigation created uncertainty and headlines that spooked investors. 3. Margin compression. Tesla's profitability took a hit. Q3 net income fell 37% year over year. Gross margins were pressured as regulatory credits dried up. This raised the question, can Tesla keep cutting prices and still make money? 4. Overvaluation concerns. Tesla traded at extremely high multiples, PE ratios that only make sense if Tesla becomes a dominant AI and robotaxi company. Any hint of bad news triggered sell-offs. Now let's talk about the future, because Tesla's 2026 outlook is one of the most debated topics on Wall Street. 1. Robotaxis will make or break the stock. Analysts agree Tesla's 2026 performance will most likely revolve around its robotaxi ambitions. Here's what we know. Tesla is testing cybercabs in Austin. The pilot is limited and still requires safety drivers. Musk promised full autonomy in Austin by year-end 2025. Tesla is far behind its own projections, only approximately 60 robotaxis versus the 500 promised. If Tesla delivers, the stock could explode. If it doesn't, expect volatility. 2. New vehicle models. Analysts expect Tesla to announce new EV models in 2026 to boost global sales momentum. This could help offset the end of US EV tax credits. 3. Margin recovery. Battery expansion in Berlin and manufacturing improvements could help Tesla rebuild margins, but this will take time. 4. Continued volatility. Tesla is part of the Magnificent Seven narrative, meaning it moves with AI sentiment, not just EV fundamentals. Expect big swings. 5. Valuation risk. Tesla's valuation assumes massive future success. If robotaxis or AI initiatives fall behind schedule, the stock could face sharp corrections. Final takeaway. 2025 was the year Tesla reminded everyone why it's one of the most exciting and most unpredictable stocks in the world. It crashed, it soared, it reinvented itself, and it set the stage for a potentially transformative 2026. Robotaxis, AI, new models, and global expansion could push Tesla to new heights. But high expectations and fierce competition mean the road ahead won't be smooth. If you enjoyed this deep dive into Tesla's wild 2025, hit that like button, subscribe to the Daily Stock Drop, and drop a comment. Do you think Tesla will dominate 2026 or disappoint? I'll see you in the next one.